Oh, hello everybody. I'm just back from the fitness center, from the gym. So, no, when you look at asset classes, you can make actually with almost any asset class money. Every asset class is long term, is making you a return, even after inflation. And the Deutsche Bank did a study, a long-term asset study, and they researched what the return is of several asset classes like stocks, real estate, gold, and wheat, and so on, and bonds, government bonds, and what they figured out is like they did it like for 20 years, I think for 100 years and even longer back. And there's always a positive return even if you take out inflation. Consider inflation, take that away from the return, and you make with almost every asset class money, long term, average, every year. So, but the highest return you have is stocks. It's like nominal you make with stocks almost 10%. Like I don't remember, but maybe for 100 years, average you make 9.5% return with stocks, US stocks, every year. And take out inflation, it's maybe then 6.5% or so, 7% you make after inflation. Real return with stocks. So that's the best asset class that's out there are stocks. And the second one I think is are bonds of corporations, and they also have a return after inflation of I think 2.5% over 100 years. The study Deutsche Bank did was published last year in September 2014. You can find it when you Google it. So anyway, so what it tells you, and also gold did a positive return after inflation. Not just gold, so many other things. It's just amazing. I'm like surprised to look at it. And I mean, you can almost touch anything you want. Every asset, real estate, a house, owning a house, average you make a positive return. So your money is protected and you even make a small positive return after inflation. So you get richer. But the problem is that we humans are like animals that go with the herd. So we go with trends. We follow others. When biotechnology is hot, we go into biotechnology. If tech stocks or internet stocks are hip and trendy, we buy internet stocks. When they are expensive, when they are brutally expensive, we buy telecom stocks when they're expensive, like in the 2000 bubble. We buy real estate when it's in a bubble. So the problem is, first of all, that we humans buy at the wrong time. We buy high. And then we sell low. When the problem occurs, we sell it because we are anxious, we are worried. And that's a big problem. The other problem is the patience. We don't wait. We don't have the time. We jump in, we jump out of assets. So we don't hold on to the assets when we own, like, let's say, gold or so. We buy gold usually when it's pretty hot, and then we sell it because we're disappointed and we get nervous when it drops. So lesson learned is, the trick is buy any kind of asset you want. You can diversify your wealth. You have different assets, hold on to them, but don't buy them when everyone is buying them. That asset class, buy an asset class, buy a stock that is not very hot, that is not loved by everyone. And then once you have done it, just be careful and hold on to it for very long periods of time. And again, the best asset class out there are stocks, and stock market, the Wall Street is the best. So I haven't seen anything else besides that. So I would focus pretty much on stocks, but you can also buy real estate, gold, and so on, what I said. There are just two things, I think, in the study, but most people don't care about it. I think it was wheat. And the other thing that was negative, lightly negative over 100 years average after inflation. And another thing, I think copper. So, but most people shouldn't worry about that. So anyway, to summarize it, almost any asset class makes money long term after inflation. You need patience, and you buy that asset class if it's not hot. And if you do that, you will do very, very excellent. You will have a fantastic financial future with it. Okay, that's all for today.